Ladies and gentlemen, thank you for standing by. Welcome to the Tel Aviv Stock Exchange Q1 Results Conference Call. All participants are present in listen-only mode. Following management's presentation, instructions will be given for the question and answer session. For operator assistance during the conference, please press star 0. As a reminder, this conference is being recorded May 24, 2022. The recording will be publicly available on TASE's website. With us on the line today are Mr. Itai Ben-Zeev, CEO, and Mr. Yehuda van der Walde, CFO. Before I turn the call over to Mr. Itai Ben-Zeev, I would like to remind everyone that this conference is not a substitute for reviewing the company's annual financial statements, quarterly financial statements, and interim report for the first quarter of 2022, in which full and precise information is presented and may contain inter alia forward-looking statements in accordance to Section 32A to the Securities Law 1968. In addition to IFRS reporting, we might mention certain financial measures that do not conform to generally accepted accounting principles. Such non-GAAP measures are not intended in any manner to serve as a substitute for our financial results. However, we believe that they provide additional insight for better understanding of our business performance. Reconciliations between these non-GAAP measures and the most comparable related GAAP measures are included in the tables that can be found in our earnings press release and in the slide presentation accompanying this call. Both can be accessed on the English Maya site and in the investor relation portion of our website at ir.tase.co.il/en. Mr. Ben-Zeev, would you like to begin?
Good evening, Israel time, everyone, and thank you for joining us today. I'm happy to host you in our earnings call. We are opening the first quarter with strong results and record revenues that reflect the ongoing development and growth in all the core activities of TASE. The all-time record revenues present an increase of close to 40% in the trading volumes and an increase of 50% in the EBITDA compared to the corresponding quarter last year. The growth derives, among others, from the significant increase that we had with more than 100 new companies that joined TASE in 2021 and in the first quarter, a move that boosted and strengthened all the activities of TASE and generated a significant increase in the number of new clients that use the services and products of TASE. The first quarter was characterized by strong fluctuations in all global markets in view of Russia's war on Ukraine and the resulting uncertainty, the looming inflation, and the interest rises that began in the United Kingdom, the United States, and in Israel. Nevertheless, it is important to note the relative stability that characterizes the Tel Aviv Stock Exchange compared to the global exchanges. The more appropriate balancing of the sectors that are traded on TASE is reflected in more moderate fluctuations, which provides TASE with a significant advantage over the world's largest exchanges. TASE leading indices, the TA35 index and the TA90 index, increased by an average of 2% in the first quarter, continuing the indices' rise from 2021 and outstanding in comparison to the leading global indices. At the same time, the TA oil and gas index soared by 33% in the first quarter as a result of the surge in global oil and gas prices and the growing demand for the import of gas from Israel. The fluctuations in the market resulted in strong equity trading volumes, which was 38% greater than the average trading volume in the full year of 2021. However, the number of IPOs was somewhat reduced, but still we had 8 IPOs in the first quarter. At the same time, capital raising on the equity market was strong, totaling 7.5 billion shekels, representing close to 30% of the total capital raised in the full year 2021, including 1.4 billion shekels raised in 8 IPOs, 3 of which by companies with a market cap of more than 1 billion each. Capital raised from the public on the bonds market was also substantial, totaling 24 billion shekels, representing close to 31% of the total capital raised in 2021. We also saw in the first quarter a growing amount of foreign investments into TASE, totaling 3 billion shekels net in shares, following net investments of 13 billion shekels in 2021. We are also seeing a growing number of foreign ETFs listing on TASE. In the first quarter, international investment firm Invesco listed for the first time 10 foreign ETFs, joining BlackRock and Lyxor. To date, 39 foreign ETFs are listed on TASE with a free float value of 2.2 billion shekels. Recently, 2 new TASE members were approved: the Digital Bank, which is planned to commence operations in the coming months, and FAIR of the FMR Group, which is already active on TASE. They are joining the already approved TASE member, Barak Capital, which is planned to commence operating in the coming months. We are in contact with several other significant international trading entities, one of which is quickly advancing towards approved remote membership. The joining of new TASE members is expected to increase the trading and the retail activity on TASE. In this quarter, too, we continue to improve the accessibility of the information to the public and increase its involvement in the trading. In early March, we reduced the minimum order size in trading to 500 shekels, and since then, we have seen the number of new orders for shares included in the TA-35 index grow 7 times larger, from 10,000 daily orders to 71,000 daily orders, and we expect this trend to persist. At the same time, in the first quarter, we launched the English TASE app. The Data Hub service continued to grow this quarter. A little more than a year after the launch of the service, the number of clients has increased significantly. In the coming year, the variety of products offered in the system is planned to be expanded for both existing and new clients. In addition, we plan to introduce new information and analytics services during the year to accommodate other audiences. And now, I would like to update you on our strategic plan. In preparing for the challenges and the opportunities for the coming years, which include, among others, accessibility and implementation of innovative technology and investment products, such as the fields of digital assets like crypto, for instance, as there is still regulatory uncertainty surrounding the supervision of the field in Israel, we have to wait with the approval of the strategic plan, since this fundamental issue must be addressed in TASE strategic plan. I can tell that the macroeconomic situation in recent months, alongside the extensive technological experience and our surplus liquidity, allow us to explore a number of investment opportunities in fintech companies, as well as our ability to provide technological solution services to international entities such as exchanges and clearinghouses worldwide. Finally, further to TASE announcement last March of its intention to formulate a plan for the buyback of the company shares in an amount of up to 100 million shekels and for a period of up to 2 years. Today, the TASE Board of Directors approved the first buyback plan in an amount of up to 36 million shekels over 6 months. Accordingly, the approved plan contains restrictions on the daily volume of purchases and the buying prices, which shall apply to purchases carried out pursuant to it. The buyback will be executed by an external broker that is not related to the company. And now, I would like to hand over to Mr. van der Walde, who will continue with a review of the first quarter results.
Thank you, Itai. Good evening, everyone, and thank you for joining us today. I am very pleased to participate in our earnings call. In the first quarter, TASE achieved an all-time record in revenues, EBITDA, net profit, and EBITDA margin. Our revenues in the first quarter increased by 25% and amounted to 97.7 million shekels, which were the company's best ever revenues. The increase in revenue was in all activities and reflects the increase in the number of companies traded in TASE, investors, and launched new products and services. Revenues for the quarter also include the update of recognition of revenue from listing fees of shares and ETFs, which contributed a 7% increase out of the 25% in revenues. TASE's profitability increased significantly throughout the first quarter of 2022, during which the adjusted net profit increased by 50% and the adjusted EBITDA margin reached a new record of 38%, as I will show in detail in the upcoming slides. I will begin with slide 4, which shows some of the key highlights from our results of the first quarter. Our revenues for the first quarter of 2022 increased by 25% compared to the first quarter of 2021 and amounted to 97.7 million shekel. Adjusted EBITDA for the first quarter of 2022 totaled 36.8 million shekel compared to 24.6 million shekel in the first quarter of 2021, an increase of 50%. Financing expenses in the first quarter of 2022 totaled 5.2 million shekel, compared to financing income of 0.1 million shekel in the first quarter of 2021. The adjusted net profit amounted to 14.9 million shekel, an increase of 50% compared to the corresponding quarter last year. After going over the highlights of our financial results, let's take a deeper look at the composition of our revenues and expenses. Let's go to slide 5. Our revenues from trading and clearing commission increased by 16% compared to the first quarter of 2021 and totaled 39.4 million shekel. The increase between the first quarter of 2022 and that of 2021 resulted from higher share trading volumes, which contributed 15%, and from an increase in trading days, which contributed 3% to the increase, and was partially offset by a decrease in government bonds trading volumes. Our revenues from listing fees and annual levies increased by 51% compared to the first quarter of 2021 and totaled 24.8 million shekel. 36% of the increase in revenue is due to an update of the period during which the company recognizes revenue from listing fees from shares and ETFs, pursuant to IFRS 15 revenue from contracts with customers. 15% of the increase resulted from listing fees and annual levies as a result of the increase in number of companies. Our revenues from the clearinghouse services increased by 15%, totaling 17.4 million shekel. 8% of the increase resulted from existing services rendered by the clearinghouse members and listed companies, and 6% of the increase resulted from custodian fees. Our revenues from distribution of data and connectivity services increased by 13% compared to the corresponding quarter of 2021 and totaled 14.3 million shekel. 6% of the increase resulted from raise in the revenue from connectivity services, and 6% of the increase is due to the update of fees during 2021 for customers outside Israel. I will now discuss our expenses in the first quarter of 2022. Please go to slide 6. In the first quarter of 2022, our adjusted expenses totaled 73.3 million shekel, compared to 65.4 million shekel in the corresponding quarter of the previous year, an increase of 12% year-over-year. The expenses related to employee benefits increased by 7% and totaled 40.2 million shekel. The increase in the expenses mainly results from the annual salary updates and bonus provisions, and the decrease in capitalization of employee compensation for software costs. Computer and communication expenses increased by 2% compared to the corresponding quarter of the previous year and totaled 6.8 million shekel. Marketing expenses increased by 232% compared to the corresponding quarter of the previous year and totaled 5.7 million shekel. The increase is a result of the timing of marketing campaign launches for digital media and traditional media. The depreciation and amortization expenses increased by 8% compared to the corresponding quarter of the previous year and totaled 12.4 million shekel. The increase in depreciation and amortization expenses is due to the launch of several new products and services in the last 12 months. The financing expenses totaled 5.2 million shekel compared to the net financing income of 0.1 million shekel. The transition to the financing expenses resulted from a negative return of 2.5% on the company's investment in marketable Israeli government bonds. I would like now to review our financial position highlights. Please go to slide 7. As of March 31, 2022, our equity totaled 669 million shekel and comprises 72% of the balance sheet, excluding open derivative position balances from our clearinghouse activity. In addition, we have approximately 417 million shekel in cash and investment in financial assets. We don't have any financial debt. We have 137 million excess liquidity and 311 million shekel excess capital above our regulatory requirements. During the first quarter of 2022, we declared a dividend in the amount of 22.7 million shekel, which was paid on April 7, 2022. And with that, I will turn the call back to our moderator to conduct the Q&A.
Thank you. Ladies and gentlemen, at this time we will begin the question and answer session. If you have a question, please press star 1. If you wish to cancel your request, please press star 2. If you are using speaker equipment, kindly lift the handset before pressing the numbers. Your questions will be polled in the order they are received. Please stand by while we poll for your questions. The first question is from Dan Fannon of Jefferies. Please go ahead.
Thanks, and good evening. My first question is, probably for you, Yehuda, just on the accounting change. I understand per the release what that relates to, but want to think about it on a go-forward basis. Should we take out the one-time benefit and then grow from there, or is this a decent run rate for thinking about future revenue?
Hi, Dan. Good evening, and thank you for the question. Since the adoption of IFRS 15, we start to recognize our revenue from listing fees over time and not on the time that we collect those amounts. So we have until now from that more than 110 million shekels that we didn't recognize, and this is a deferred income from listing fees. The question was that what is the time that we can recognize the listing fees from shares and ETFs, and we remeasure it in the beginning of the year, and the impact of that was in two ways. First, for agreement that we, according to the new measurement, our obligation to the customers ended, we recognize immediately 4.3 million shekel. And for contracts that didn't finish but there is acceleration in revenue recognition, they will contribute in the future and in our revenue. And you can see in our financial statement in page 20 that we gave the upcoming quarters the recognition of income from listing fees, and for every class of if it's shares, corporate bonds, ETF, government bonds, and T-bills. So the one-time influence is 4.3 million shekel in the first quarter, but the impact is going forward for the upcoming years and it's about accelerated between 1 to 1.3 million shekels per quarter.
And then, hi, it's Itai. I just want to add that even after the accounting change that was made, we are still very conservative when you compare us to other exchanges worldwide.
Understood. Okay, that's helpful. And just to be clear, you said page 20. I just want to make sure I'm looking at the right.
The appendix, deferred income from listing fees, that show you the
breakdown.
The breakdown for the 4 quarters, next 4 quarters, and after that, on basis of 12 months.
Assuming, and then in addition to that, you have new companies that could list. Obviously, companies can go away or ETFs can go away, but the additional stuff would be additive to that.
Yes,
of course. Exactly.
Got it.
This is like a backlog of company that and this is the numbers that we recognize from already existing contracts.
Right. Okay. And then if in terms of, obviously you have large levels of excess capital. You talked about fintech companies and potential investments. So maybe if there's a little bit more color that you could provide in terms of what it is you're looking at and how you're thinking about the potential inorganic growth opportunities.
Well, the thing is, as you can see in the numbers, we are growing in all aspects of the business, and the way we see what we are doing, we expect to see more ongoing organic growth. And as I said in the past, I think that given also a strong financial situation, it's not like we are missing anything. It's not like we need anything in specific. We still see, double-digit growth with the business. But I think it's good timing also because of what happened with valuations in the market, that we can look for interesting investment opportunities, like other global exchanges that do it occasionally. I think that over time, and this is part of what we'll be discussing in our strategic plan, will be if there are certain areas that will be a nice fit to our strategy in data analytics or other elements. But it's not like there is a specific segment that we target or something like that. It was important for us to give some clarity that, let's say even though it can be theoretically a small transaction, but it can be an interesting transaction, may occur over time.
Understood. And just in terms of the strategic update, so should we be thinking about once there is more regulatory certainty around digital assets that we would get a more formal strategic update from you? Is that fair?
Yeah, I mean, I expect that in the next couple of months, because there's a committee in the finance minister that is now talking about digital assets. So we hope that, in the next couple of months, something will be published out of it, and then it will make sense for us because we have a lot of plans and a lot of discussions that once we come up, we know, in the country that we operate, what the country is thinking. Nothing formally was published in Israel in recent years about digital assets. We have plans. We want to move forward, and hopefully we can do it in the next few months.
Okay. And then within the quarter, or as you think subsequent, have there been any noticeable pricing changes that you guys have put forth across either the transactional or the non-transactional portions of your business?
No, nothing notable has happened in the past quarter.
Okay. And then other revenue is bouncing back. I think that was cited in the release that some tech agreements with other parties. So maybe just talk about how we should think about that. I think historically you had events at the exchange that went away with COVID, and just want to make sure as I think about the revenue opportunity and other and it normalizing what that should look like.
Well, we did sign a consultancy agreement with another exchange. As I said in the past, we have an advantage that we do not rely on outside vendors. We operate our technology, and we have highly skilled personnel, and it's in all aspects, in clearing, trading, storage, infrastructure, and because of the world of the exchanges, we speak with a few of them, and we sign an agreement that basically gives, even though it's not a major amount of money, but it's something that we haven't done in the past. And as I mentioned earlier, this is also a venue that we want to explore, that on certain circumstances we may decide to put more efforts into it. We do see the technological advantages that we can bring to other SMEs exchanges, but it's a question whether we should do it. When we sign a relatively small agreement, which is a consultancy, obviously, we should do it. But I think that part of the strategic plan, we will go through the examination if we should explore it to a larger scale. We don't know the answer right now.
Okay. And then just in terms of expenses, just any update in terms of the spend and the priorities as you think about the rest of this year? Obviously, marketing, I know, is timing, but you've had success with, expanding your brand and using marketing as a tool for that. So maybe an update there. And then also with regards to the employment agreements and the how we should, or when we should anticipate clarity around the negotiations with those.
Okay, so on the marketing, as you mentioned, we've been successful in doing all of the marketing campaigns, and we've had very positive feedbacks, and we see it in the results. So we will continue with that, but we don't know when. This is part of of the budget of what's happening in Israel, but. So I can't tell you we'll have a campaign this quarter or the next quarter or the fourth quarter, but we are very confident that we have advantage in continue to basically expanding the brand and making more traction. With respect to the employees, the 5-year agreement is about to expire. I don't think that will be in a position to sign a new agreement soon. My guess that it will take time. As I said before, the new agreement that will be signed we will not impose a higher rate of expenses than the one that we are having in the several years. And because of that, the negotiation can take time. I don't see any implications with respect to the negotiation on the operation of the business. And once we'll have more clarity, we'll share about it. Right now, my personal estimate that it is something that will take time.
Understood. Okay, thanks for that. And then just lastly, you mentioned new remote members in the backlog, and I think you mentioned also that the benefit of potential retail. So I just want to understand who the partners are, and as I would have thought that was more institutional-orientated partners, but maybe discuss the retail opportunity with that, and then maybe broadly update us on your strategy for retail in general and addressing that potential part of the market more broadly.
Yes, so we are carrying out the strategy with the retail, and we see increased participation by retail. It's about the marketing, and it's about the value proposition, the products, the services, the data services that we are coming out, and we are thinking of more elements that we can give to the public. The remote membership, I was referring to an international player because one of the things that we had, which is now it's much better, but still we have a long way to go, is the liquidity in the equity shares. We don't have enough institutional and international market participants. We want to have all of the liquidity providers of the world active in our market. We are talking, I think, with all of them. I think that all of them are thinking that Israel is a very interesting market, and we see increased participation by international investors as well. And basically then what we are doing, we want to expand the piece of the retail, the piece of the international, and the piece of the liquidity providers, and basically put them all together. So we have been growing in all of those elements, but I think that now when COVID is finished, hopefully is finished, on the business development side, it's easier for us to pitch and bring to TASE those institutions. So this is something that is clearly on our agenda, and we believe that we'll see more increased accessibility and trading and data because all of those elements.
Understood. Thanks for answering all my questions.
Thank you very much.
If there are any additional questions, please press star 1. If you wish to cancel your request, please press star 2. Please stand by while we poll for more questions. There are no further questions at this time. Thank you. This concludes the Tel Aviv Stock Exchange Q1 Results Conference Call. Thank you for your participation. You may go ahead and disconnect.